Thanks very much, Kate, and thanks very much to Denver Gold Forum for giving myself and Greatland the opportunity to present today. I always like to start off just by orientating people around the Greatland strategy, which has 3 pillars to it. Expanding and delivering on our flagship HAVIERON asset, which is currently under development and should have first ore in 2024. Continuing to invest in the drill bit and unlocking the option potential within our exploration portfolio. And thirdly, looking at opportunistic growth, where we can add other growth opportunities to our portfolio in a financially disciplined way. For those that follow the story, last week was a really important announcement for us, which involved debt, equity, and a number of new directors joining the board. To start with the directors and really that leadership element of the company, Jimmy Wilson has joined. Jimmy has an extraordinary pedigree, over 25 years with BHP, the world's largest mining company. He's joining as an executive role where he'll be part-time with us in the office, but he ran the entire iron ore division of BHP and also did a number of other very senior roles within that organisation. So he's a tremendous amount of operational experience joining the team. Elizabeth Gaines will be joining from 1 January or beforehand. Elizabeth is an exceptional calibre person to be joining our board. She's just stepped down recently as Managing Director of Fortescue, which is an ASX top 10 company, some $50 billion, where she presided over a huge expansion of that business and has a wonderful background involving private equity, so just brings a huge amount of strategic focus to the organisation. And then also joining from 1 January or before is Mark Barnabar, who will join as the new chairman. Mark has an exceptional career, formerly global head of resources for Macquarie Bank, presently deputy chairman of Fortescue, again $50 billion organisation, and also sits on the Reserve Bank of Australia, the equivalent of the Bank of England or the Fed here in the US. So just quite an astonishingly high calibre group, and really that gives us a lot of confidence about how we can grow the company moving forward. Also part of the last week's announcement was around the funding. We've brought in a really high quality group of banks, around a $220 million 7-year banking facility. No repayment until 12 months post-project completion. And the calibre of those banks, ANZ, HSBC, ING, it's a very simple facility, no royalties, no equity kicker, but a beautiful debt piece at a very competitive pricing at 3.5 plus BBSY. So we're really delighted to have those calibre of institution joining as part of the stakeholders of Greatland. And then the final leg to last week's announcement was the equity component. So we did this in 2 parts. Tribeca came in, cornerstoned an institutional equity raising. That was an incredibly important step for us and had a very positive reception in the market. And then in combination with that, we then had Wyloo Metals join as a strategic shareholder. That came in and was announced at the same time as the debt piece, which meant overall we were very well funded to complete the HAVIERON project into 2024. And so when we look at that, what we've achieved over the course of the last couple of weeks is we've raised 390 million Australian dollars. That gives us a huge amount of confidence that we are fully funded to put HAVIERON into production, together with our joint venture partner Newcrest, global major. We continue to advance the development of HAVIERON. just to remind people, we started that development in February 2021. We're now kind of over 18 months into that development, and what we're seeing is the advancement rate of that decline continues to accelerate as we get through that Permian layer, starts soft and then gets increasingly competent with depth, and that accelerates our mining rate. It's also just worth noting briefly, this is around the evolution of from PFS, where that came out with a relatively modest value on Havieron. That could have triggered a milestone for a right for Newcrest to acquire another 5% of the asset. We ultimately went through a process with that to define what a suitable value for that option would be. We increased that by 5.3-fold, so it went from up to a value of about 1.2 billion, so we added $1 billion to that. That was a really important milestone for us. In the end, Newcrest elected not to exercise that option, which I think was the best possible outcome for our shareholders. So we retained the full 30% interest in Havieron, and what that effectively means, it's our prize asset. We're delighted to own more of it, and it increases our exposure to Havieron by 20%, which was a tremendous outcome for us. In terms of the board right now, so I mentioned the addition, but Alex, Clive, and Paul Hallam, we have a tremendous board together with myself, and Jimmy joined last week, Jimmy Wilson. We have the other two joining sometime around 1st of January or beforehand. But the calibre of that board, I think, gives us every opportunity to make the most of the opportunities Greatland has. And together with that, we've built a really exceptional management team. And that's really important because what we want to be is good owners of Havieron. We want to be good partners in that joint venture. We're now funded, which I think gives us a better platform to be a partner, but also have the organisational capacity to understand and contribute to Havieron and its life cycle. Moving to the asset itself, it's in Western Australia. Western Australia, I think, is presently ranked #1 on the Fraser Index for global mining jurisdictions, but perennially is top 5, maybe top 10 on the outside. It's a beautiful place to own a mine. And what we have here is an amazing confluence where we have a world-class ore body next to existing infrastructure. It's just 45 kilometres away from the existing Telfer mine. We get to leverage that infrastructure to give us this low capex, low risk pathway to production. And of course, we're developing all this with a global major in Newcrest, which I think talks to the quality of this asset. The exploration continues to grow. Since our maiden resource 2 years ago, we've basically maintained a 43% compound average growth rate of exploration advancement or growth in that resource, presently at 6.5 million ounces, with about 3 million ounces of that, depending on your copper price, in the reserve, which is running at about 3.7 grams. So this is, all of that really comes straight into the mine plan, and the grade of that resource also should give you a lot of confidence that that can be brought into the mine plan over time. This slide just kind of shows the growth in the resource that was effectively over a 10-month period. So really it's been a function of drill density as to how much of this ore body we've been able to bring into resource and reserve classification. But the best number on this page is that 86% in the green. That is the conversion from resource into reserve. That is an exceptionally high number, the highest number I've seen in my career. And what that tells you is, once you've drilled this and you've delineated that, it's economic to bring that into the mine plan. So it's an exceptional outcome. This next slide is ounces per vertical metre. It's my favourite slide in the deck. I think ounces per vertical metre are an incredibly good indication and for an underground mine. And the top 400 or 500 metres of this ore body, we're averaging over 8,000 ounces per vertical metre. That's exceptional, and this is on a single decline access, a relatively compact ore body, about 650 metres by 600 metres across, and we're getting all that ounces in that mining area. That drives your capital efficiency, that drives your all-in sustaining cost. How many ounces we're accessing per metre of development. So that's a tremendous outcome. The difference between that red line and then the pink line further to the left of screen is effectively, or right of screen I think, is effectively, again, just that growth over 10 months of the expansion of that resource base. That left axis shows you the metres drilled per vertical metre, and you can see the correlation, as you'd expect, between ounces delineated and metres drilled. 10 months ago, we were telling people, look, it doesn't cut off. It's just a function of drilling. You can see 10 months later, we've had another 450 metres of vertical depth to the ore body. But also, we think over time, that line becomes more parallel down the page. Presently, we don't see any reduction in grade. We don't see any reduction or in the widths of the ore body. So it's an exceptional ore body, sub-vertical, which really lends itself to underground mining. This slide can be a little bit busy at first glance, but we're now looking at the ore body in plan. And in this plan view, you can see that southeast crescent. So that's where we're going to start mining. That's a very high-grade part of the ore body running around 5 grams. So we're putting that single decline access into there, pulling ounces or tonnes out of that southeast crescent, putting it through the existing mill, generating free cash flow, which we can then reinvest in the mine. And then as you'll observe from that, probably 4/5 of that ore body sits outside of that southeast crescent. And that's where, whether you listen to Sandeep at Newcrest or myself, we talk about the bulk mining potential of this ore body, both at that eastern breccia and also in that northern breccia. We think what you've seen in the grades coming out and of that eastern breccia is it continues to get better and better for us. It's also getting a lot bigger. I think that's probably the next mining area in the at Havieron, and that it sets offset from the southeast crescent, so there's the opportunity to run that in parallel. So we run that really high grade southeast crescent as a SLOS, as a sub-level open stope. Control dilution, try to take as much of that as we can, so we will then add paste fill and take that all out, and then potentially the bulk mine running in parallel. And of course, with Telfer infrastructure already sitting there, which is a 20 million tonne per annum plant nameplate, there's plenty of capacity sitting there. Train B is the newer train is dedicated to Havieron. So ultimately, there's the opportunity with the continuation of southeast crescent mining and then bringing in the bulk mine to have more of a fill-the-mill strategy. Yeah, I talked about the quality of the ore body, and I talked about the ounces per vertical metre and how that drives your cost and your capital efficiency. So this is where we sit on the cash curve for all-in sustaining costs at $643 an ounce. So that's exceptional. $1,000 cash flow per ounce. And because our portfolio really just has this one high-quality asset, we are the second lowest cost gold miner on the planet, sitting behind the Russians in Polyus, but they're quite busy in Ukraine right now. So I think we are the lowest cost investable gold company on the planet. I wanted to mention inflation, which I'll be brief with given the time we have. But I think the nature of inflation is it is across sectors, and we won't be completely immune to it. But I think we are relatively insulated from that. Australia itself is somewhat insulated from inflationary pressures, but overall we are leveraging existing infrastructure. We're not going through a substantial project construction. We're not trying to mobilise a huge construction team. So that really does limit your exposure to some of those inflationary cost pressures. We have teams in situ, already about 225 at Havieron, another 1,200 odd at Havieron down the road. So again, we have those people in place. They like working at the site, they're used to the flights, they have collegial environment, they like the food. So that always helps you retain those people. And then, of course, this cost structure is actually based on an actual cost structure at Telfer. This isn't us kind of trying to develop that off a spreadsheet for a greenfield site. This is effectively a brownfields construction for Newcrest. And although I think the sector is very good at being able to estimate those costs, we actually have actual run rates. We know how much it costs to have flights there. We know how much it costs to employ people. We know how much it costs to bunker fuel, etc. And then finally, these numbers have been worked up by the joint venture in conjunction with Newcrest. So we have their experience of 35 years in the Patterson, but also their capability in terms of coming up with credible and deliverable financial outcomes. The project CapEx itself is presently 98 million attributable to Greatland for our 30% share. Now, that's US dollars, and I somewhat unhelpfully previously described us raising about 340 Aussie in capital. So that's well in advance. That's some 230 million US. But we've also, this is based on the PFS, we've also flagged that the feasibility study, which will come out in this December quarter, so just a few months away now, we've flagged that will upgrade Havieron from 2 million tonnes per annum to a 3 million tonnes per annum SLOS case around that southeast crescent. So it's going to get 50% bigger. You'll still only have one set of surface infrastructure, one decline, one transit route back to Havieron, but there will be some capital expansion with that. We wanted to feel confident that we were well funded for that. And old habits die hard. I think Kate described me before as my background CFO of Northern Star. It's always good to have additional liquidity when you're developing an asset. So we think we're really well placed with that. I'm only going to pause on this for a moment, but this is just a summary of drilling, because when I've talked about that resource previously, that was a November cutoff, November 2021. So we've really had another, 9-10 months of drilling since that. They're exceptional grades. The southeast crescent just continues to deliver. Some really high intercepts through that northern breccia as well. But for me, seeing those kind of really high grades, mostly seen in that southeast crescent, coming through in that eastern breccia, is really exciting. And then we've got that link zone in yellow there. What we're seeing is there's not a gap between that southeast crescent and the eastern breccia. We're now getting intercepts in that area as well. So that's a great area for expansion. The eastern breccia is expanding, and then that southeast crescent at depth continues to intercept ore. Again, there's nothing that cuts off the growth of this ore body. Sustainability is really important to us. In a 20-minute presentation, I'm really just going to draw your attention to it. We're developing this asset with Newcrest, a global major. They have a huge commitment, as we do, to sustainability. But culturally, we tried to reflect our values of sustainability in coming out with an inaugural sustainability report this year, which we're really proud of. Exploration, just briefly, look, the best place to look for gold and copper is where it's already been found. This is elephant country. Telfer was a top 5 Australian gold mine for some 30 years. We've got Havieron next door, 45 kilometres down the road, which we think has a potentially similar mineralised endowment. Up north, you've got the Rio Tinto Winnow asset. This is a good postcode. These structures typically run parallel across the page in that northwest structures. So a long strike from Havieron. We've got the Scallywag, 100% owned tenement. I talked before at the start, part of our strategy was to continue to invest in the drill bit. We're incredibly excited about continuing to drill there and finding the next Havieron. Even a half Havieron sitting next to infrastructure would be a huge value creation opportunity. Final slide is just to say we've got a broader portfolio of exploration, and I think Ernst Giles there is a real standout. We'd like to be drilling there next year once we solve or finalise the First Nations access agreement. which is really important to us and talks to our culture around sustainability. But we're excited about that. That's an Archean greenstone, under-drilled in Western Australia, where a lot of the gold deposits are Archean greenstone, think the super pit. So that's a tremendous additional lever in our portfolio to exploration opportunity. I'll wrap up there, and subject to Kate, have we got time for any questions? Or
we are unfortunately out of time, Shaun, but I would encourage anyone to follow up offline with Shaun.